Why don't I invest in things like ULTY or MSTY by YieldMax or any other kind of Bitcoin related cover call ETF? I've been getting comments and emails about this kind of stuff. People asking me about, every other creator's invested in some kind of MicroStrategy or Strategy B ETF. Why aren't you? So I want to unpack exactly why that is in a video like this, and then also for those who are newer, maybe help you decide whether you align yourself someone who's closer to maybe my investment style versus maybe other creators out there that invest in much higher, much more exotic yielding kind of funds. So in a video like this, hopefully you get a lot out of it. As you should know, this channel is all about yield-seeking, growth-leaning. So let's get into it right now. So let's start with the very first kinds of ETFs I don't invest in, which are the Bitcoin-related cover call ETFs. Now, I have two opinions on Bitcoin that I have been consistent on throughout the years, and they go as such, but I'm also going to share why those foundations have recently been shaken up and why I think I may eventually just end up flipping on that. And I'll get to that in a second. So the two opinions I've held throughout the years on this channel, especially if you've been following this journey for the longest time, are as such. On the positive side of things, I think Bitcoin solves a huge issue that we as people and governments face continuously, which is the debasement of currency. When something is scarce, when it can't be replicated, essentially what it does is it improves efficiencies. I mean, if a government entity only has a budget of X number of dollars and they are competing for maybe additional dollars based on performance, guess what? I mean, if scarcity exists and we need to compete for that scarcity within, say, government and departments, I think efficiency shoots through the roof immediately. I don't know what it'd be, but I do believe that if we truly were on a Bitcoin standard and it was a currency, I think we would see like a very immediate change in the behavior of people in government. When you don't have any other kind of lever to, get yourself out of the hole, right? Printing money, going into debt. These are all easy levers to pull. Bitcoin pretty much locks those levers in place. So you got to be much more strategic. So I like it from that point of view in the most basic sense. There's certainly more on Bitcoin I can get into, but for the sake of this video, I want to try to keep it relatively lean. So that's what I truly do like the most about Bitcoin and what it can possibly do. Now, as far as what it currently is, which is yes, a store of value, treat it like gold, I guess, in a sense, but it has been much more speculative. It's been remarkably a lot more stable over the last month or so. That's a short period of time, but what it currently is it's essentially investing in currency right at the moment. And for the people who are really into the Bitcoin stuff, I mean, I know I'm not as in it as some of you guys out there, but anyway, that being said, I just feel like it doesn't produce anything. I like to treat my investments like a farm, so that's a very Warren Buffett kind of way of thinking about things. My cover call ETFs do that. I invest in pretty much everything that touches all aspects of the economy, so that's what I like. Bitcoin doesn't do that. It is a kind of diversification, which I think a lot of you know. I like piles of diversification on a multitude of levels, so I like it for that. But over the past couple of years, that's what the dichotomy has been between the two. For me, so I just haven't invested in it for that reason. It doesn't produce anything. Yes, with a cover call overlay, it does, so you get access to it. There have been a remarkable amount of newer products that have come out in Canada that make it much more enticing, and I am taking a serious look. Okay, now to the part where the foundation has been shaken. But anyway, I got to hang out in Las Vegas with a bunch of other creators back in March that, cover income relating ETFs, like cover call ETFs. And I stepped into this thing about Bitcoin, and I'll share it. I'll put the picture over the screen. I try to take a quick photo of this, but it really was it was a very maybe a eureka moment. It's not the word I'm going for here, but it's sort of like an earth-shattering kind of like, no way. And basically what the people on stage had asked the audiences, they basically said, hey, we've asked all of the advisors who, I'm not sure if it was attending the event or people related in some other auxiliary manner. I'm not sure what the pool size was or how they got this information, but essentially all they said was, hey, we've asked all of our advisors, and I'm pretty sure they were talking about people attending the event who were advisors, I think, basically said, are you currently going to be, increasing, maintaining, or decreasing your clients' exposure to cryptocurrency? It might have been crypto or Bitcoin. Okay, so I'm gonna overlay the picture. I'm not currently looking at that right at the moment. And 99% said either maintaining or increasing. Okay, so that number alone is told me everything. That told me everything about adoption. Not only that, the big institutions, if once the ETFs hit, that was pretty much it. It is just now a steady rollout of that continued adoption. It's not going anywhere. Okay, so for me back in March, that really was sort of the start of okay, am I really smarter than these other people? No, I wouldn't even say smarter, but I shouldn't even say that. It's not that am I smarter? It's just, to see such overwhelming acceptance, and that's just it. When it comes to money, it's the belief that it has value. Paper money is not worth anything. It's just we believe it has value. A digital coin only has value as long as we believe it has value. Kind of like, right? I'm sure over the many hundreds of years, shells have been considered a form of currency, right? And anyway, things of that nature have been considered currency. So that's Bitcoin for me. That is changing. So what kind of Bitcoin? I have some ideas of how I'm going to invest in it, but that's to be announced. Okay. So let's get into the next bit, which is ULTY, but let's actually get some visuals on screen here. So let's move over. All right, everybody. I'm not going to show my face because I want you to see all the data in front of you. So the part 2 of this video is why I don't invest in things like ULTY. And I'm also going to share exactly kind of my methodology of how I invest as well. So let's start off inside the cover call ETF ALLSTAR tracker. As many of you know, I do these updates on this tracker every single month. It has 300 plus funds in here. You get live data. There's all kinds of good stuff in here, from distributions, AUM, other tabs that talk about taxes and following distributions, AUM. There's so much good material, resource material. You can follow my portfolio, see my transactions on a monthly updated basis. So check that into the description below. So right now we're looking at all of the Yield Max ETFs currently. They're not exactly all here. There's some that I still need to add probably for the next update. What I'm about to show you is going to fall exactly in line as to why I go the opposite way in what you're about to see. Notice the year-to-date price performance of everything related to Yield Max. There's not really that many things in the green. There's only a handful of things in the green. That's it. That's just price performance. Total return, it's a different story once you actually add in all those high yields. But let's go down to ULTY. What do we got for ULTY? We got negative 32% for the year and up 6.16% for the year. Now, ULTY's probably been on a killing spree since the bottom of the outset from Liberation Day. It's done well there, total return wise. YouTube is blowing up about this. I don't really talk about much about it because honestly, there's so many other creators that talk about it. I just don't need to be another voice. Unless it's like just taking the other side of things where I'm telling you why I personally don't invest in it. Okay, so you kind of got some of the data there. What's its yield? 73%. On its website, it says 86. The reason why it's 73 here is it's a weekly pair. These updates for this tracker only come out every month, so I can only go off of the cumulative distribution for the past month, extrapolated out forward looking for a year. So that's why you see 73, because it's based off of the July distributions. I don't know what the distributions are going to be for August weekly, so I want to make that distinction very clear when it comes to the tracker. Anything in the American tab is based off of last month's cumulative distributions and looking out like 12 months. So that's why the yields are going to look a little bit different, even if it's weekly payers. It's all smushed together, added up for the prior month altogether. Okay, now and again, why am I getting so many questions about ULTY? It's a high yielding thing. A lot of creators talking about it, whether for good or for worse. It's just being talked about a lot. Many people getting into this fund. So the question really is for you as someone who is watching this video, is this fund right for you? And if it is right for you, is there somebody that you can follow? Because it won't be me. If you are, I will say this, if you lean much closer to what I'm about to describe, like my investing methodology, and you try to basically graph the ULTY ETF onto my methodology, I am telling you right now, it's not a good fund for the way I invest. And if you lean closer to how I invest, it's not a good fund that way. However, played correctly, following, say, the right creators that play it right, and there's someone I can recommend for that, which I will. Then you know what, there could be something there. I'm not going to say ULTY just in of itself is a trash fund. It's not, because all these funds have a purpose, but they are meant for strategic goals and purposes. So the idea is you don't want to be investing in things that truly aren't right for you. As far as I'm concerned, for my strategy, ULTY is not right for me. So what exactly am I invested in? Okay, so we're going to go over to the Canadian tab. These are the funds I'm invested in. Now, what are you going to notice? Year to date, yeah, there's some red, right? And I'm not going to be surprised for anything that I think most of us invest in. We should expect some price performance red in our portfolio if you're investing in cover call ETFs. But year to date total return, all in the green, a little bit of red, nothing crazy. Like we're not talking down 25% like we saw over here with a lot of the yield max funds, right? They're all down a lot. But again, yield max is trying to do just that, max out the yield. Okay, they're going to forego much more unit price performance than other funds that you're gonna see here. Now, what do all these funds have in common, or at least what do many of them have in common? Many of them are much more closer to an index than anything. So things like, let's say, USCL, QQCL that are indexed to the NASDAQ 100, the S&P 500. HOLD is a stock-picked preferred kind of S&P 500 kind of fund, trying to mimic basically the sector mix, even though it's hand-picked. So I like that because they also write call options on individual stocks, so that leads to higher yields and you get slightly better potential for price performance. Okay. HDIV and BMAX are more North American centric, so they're not indexed, but they essentially touch all aspects of the economy. So with many of these funds, that's exactly that. They touch all aspects of the economy. I'm really just trying to hedge ignorance here. And I want to just keep it simple. I'm bullish that the economy will continue to grow. And so I just want to grow along with it. Steady Eddie. That's the name of the game for me. Now, I do value probably more layers of diversification than most. especially maybe if you're a newer investor with cover call ETFs. I like a mix of fund managers. I like the mix of different kinds of strategies. So, I was just explaining how not everything is based on an index, but it can be close to an index, like an HYLD, sort of close to an index. Then you have BMAX, kind of close to the index, but again, the idea is you're touching many, many sectors of the economy. I like geographical diversification, so that's why I have something like a QQCL, which is world. I have some Canadian funds like bank and Canadian financials, UTS for Canadian utilities, and ENCL for Canadian oil and gas, and that's all in my non-registered account. All the American stuff is in my TFSA. That one world cover call ETF, EQCL, is in my RSP. So keeping things kind of separate, diversified by geographical regions that way. So that really is how I invest. I like things that are just well diversified. I like the idea of still having some natural growth in my own portfolio. And there again, there's another layer of diversification, how I get my return. I don't want it to all be just weighted so heavily on the yield side of things, on the premiums that are generated from the cover call writing. I do want to pull some of that back, so to allow for the portfolios to grow more naturally. If you're newer to cover call ETFs, one of the big downsides is for this strategy is that it caps upside. So price appreciation is much slower. So when you have the ability to have funds that can still naturally grow, you still get some good size like yields. You don't really, if you still believe that the economy is going to grow over time, then you're not going to be necessarily as worried about, this part growing versus, having to always have to make it up with the distributions over here, which, if you are investing in yield max, you're going to have to be much more strategic, probably much more active if you're pretty much getting all your return through the distribution itself, and there really is no upside whatsoever on the price. So again, with things like yield max, defiance, you're going to have to be much more active. You're going to have to pay attention a lot more. There's probably other things you're going to have to add that are going to have to allow for more cap gains in your portfolio. There's just more to it. Whereas, on the Canadian side of things, the fund managers have done a very good job of creating a balance of funds that allow for more capital growth through the price appreciation while still getting those fairly significant distributions as well that you can see here. These are great distributions, they really are, and you're also getting some upward mobility in price performance as well. I mean, it really is a nice mix. Maybe it doesn't grow as quickly as, say, the underlying asset that doesn't have that cover call writing on it, but I just think that this is probably at least for me, it's the right way to go. I'm a busy dad. I have 3 kids. I work full time. Sometimes I work 50 hours a week. There are other things going on in my life. Like if you just think like YouTube's my number one thing, it's probably the number 3. I would say it's probably arguably the number 3 thing after family, work, right? And then as far as time constraints are concerned, it probably occupies the 3rd most amount of time that I spend on it. And I need a strategy that is able to be mostly hands-off. Again, when it's much closer to the index, you have more of that ability. You get some decent yields. You get some upward price performance as well. Can't say that enough. So that's really one of the reasons why I don't invest in ULTY, is that it's a fund that invests in some of the most volatile stuff out there. It's diversified in the sense that it invests in many things, but it doesn't have that natural upward movement that I'm looking for. So I can't say it enough, can't stress it enough. it could be a really good fund played the right way. And, it's an attractive yield. But, like, guys, I'm telling you right now, don't get so greedy for yield, because honestly, sorry for jumping around here a little too much, but the fact of the matter is, don't totally forget about price performance, because there are some really amazing days where your portfolio can see some incredible gains from price performance, not just simply tapping your foot, waiting for that distribution, right? Some of people's wealth truly is made up on, what is that, the 4 to 6 days during the year, that you need to be invested on to gain for that. So again, Alti has its place. And this is who, and anyway, I want, as we kind of move on here, to get more into the world of Alti, who is the guy to go to when it's someone who talks about Alti. Now, this is Todd. I've met Todd before. I got to hang out with him in Las Vegas for that, exchange ETF event. Really passionate guy. And I got to say, before I met him, I had never seen any of his videos. He doesn't even know I'm making this video and talking about his channel. But I got to say, and maybe since I've met him, I've only watched maybe a couple of videos, just because the stuff he talks about, the high yield stuff, that's not really my jam. But for a video like this, I really wanted to get kind of inside the world of Alti. I was like, who is the guy? And it was like, it's Todd. Of course it's Todd. And so I've just been binge watching his videos all week, and I gotta say, this guy makes Alti sound really interesting. The way he plays it, this is the guy you want to listen to if these sort of high yield funds are your jam and you really want to try to make it work. Now, one thing I did with Todd with his videos is I just wanted to see how consistent he was in his messaging. So I watched basically his most recent video, and then I went and watched a video from 3 years ago. The guy's messaging is the exact same. He's got a rinse and repeat system that and the way he talks about living out of your brokerage, using margin to get ahead, things that I am kind of interested in using. So even after a video like this, and I kind of just watched a bunch of his videos for the exercise of a video like this, I'll probably still watch more of his stuff, because he does talk about some really interesting things, like writing your own call, writing your own options and how to play. I would like to eventually do more of that kind of stuff and get more into that world instead of just breaking funds down. I'd like to kind of do some of that myself, but he's a good resource for that. Who knows, maybe I'll have him on the channel one of these days. We'll reconnect. Anyway, he's probably a solid guy to take up on when it comes to learning more about Alti. Okay, hold on a minute, check this out. Let's see how many videos he's talking about Alti. Alti in the title, Alti in the title, Alti in the title, Alti in the title, right? So you get the idea. Alti is Alti is basically one of his core components to his strategy and what he does. But again, he's not necessarily a kind of just buy and hold, kind of leave it be, whereas my portfolio is that. It really is a sort of just leave it to the fund managers, and I'm going to straddle the, some price performance, mostly getting my return through the distributions, but I still want that price performance. I have a portfolio that's pretty set now. I have no intentions of changing it. Really happy with it. 11 ETFs. So I'm just going to hold it, let it do its thing, get the payouts, and go from there. Whereas, hey, Todd, he's going to be more active. And one thing Todd does talk about, that I think gets lost in the conversation, is the fact that, again, you need those capital gains. He talks about that too, the importance of that as well, and how to grow your portfolio. So it's not like he is solely just talking about, getting in and out or whatever with those high yield funds. He talks about also how to get those capital gains in your portfolio as well. I'm not talking about realized. I'm just saying the price performance movement. So everybody, that for me is really where the breakdown occurs. Is I am very much a buy and hold kind of investor, closer to the index, most like hands off mostly. And as time goes on, I probably will do less and less to my own portfolio. But really happy with what I have here. I'm sure over time, like these will change, or I'll add something as new information comes in. That's just the way things kind of go. And you shouldn't be a dinosaur. Just, I'm going to absolutely invest in all these funds for the next 40, 50 years. I'm sure some of these funds won't be around for that long. So always got to be willing to adapt and change. And for me, that is something that I need to do as well. So it's up to all of you. What do you lean closer to? Please let me know in the comments below. Do you lean much closer to me? Buy and hold, set it, forget it, in a sense, or are you much more active? You want to be, much more maybe say closer to Todd, where he is much more active in his portfolio, and you maybe want to learn how to be more active out of your portfolio. You want to get to that fire a lot faster, and maybe using margin and using high yield funds might get you there. But if you're someone who's like me, just a steady Eddie in your job, just doing your thing, you're watching month after month, watching those stable distributions grow month after month. And that's what it is for me. Stable incremental distributions growing month after month. I think by September I'll be up to something like $5,000 a month. It's absolutely incredible because just 3 years ago I was probably at like $30 a month. So it's incredible growth. Anyways, let me know in the comments below kind of where you all stand. Was this video fair or not? And like I always say, hit all the buttons of like and subscribe variety. See you all in the next video.